Zoran Mamdani, that's Mamdani. But it might as well be OMFG, because that's how the real estate industry sees the self-styled socialist. We've already learned of one big deal being aborted, and players are promising many more. This is the Promote Podcast, your insider guide to the money and mania of the CRE markets. I'm Hitem.
And I'm Will.
Hi, Will. Could you loan me $500 so I can buy into SL Green's casino bid? Because I think they're going to win it.
Sure, but then $370 would go to Mark Holliday's compensation.
This week, we break down the fear and loathing, and there's a lot of both, stemming from Mamdani's improbable win in the New York City mayoral primary. We then dive into a particularly juicy offshore hotel transaction. Hyatt is selling Playa properties in a $2 billion asset-light mega deal. And finally, we head back to New York. A coveted casino license is up for grabs, and developers are doing whatever they can to score it. Will, you ready to play some fucking cards?
Okay, Worm.
Let's play some fucking cards.
All right, we got to start, obviously, in New York City. The Zoran Mamdani thing, a nobody, by the way, a couple of years ago, beat Andrew Cuomo. Maybe beats too soft a word. He trounced him. It was a smashing.
Yes, it was. And you could have seen it all the way from Andrew Cuomo taking his black car 5 blocks to park illegally to vote for himself.
We're not going to spend too much time on the political side of things, except where it comes to real estate. But I think this is probably the most surprising political masterclass in the country since Obama won. In the last few days, primary was, I think, June 24th. In the last few days, there's this hybrid retreat and resist strategy that's shaping up. So some of CRE's biggest players are lining up behind Eric Adams.
I mean, look, rats don't have swag. Eric Adams has swag, so I don't blame Scott Reckler for getting behind him.
He definitely has a ton of swag. So Scott Reckler, a bunch of other very big players in New York real estate are now funding Eric Adams after, lining the pockets of Andrew Cuomo during his run. But we knew there was going to be a lot of rhetoric, right? This checks so many of the fear boxes for real estate people.
Oh, yeah.
Beyond the racial and identity parts, let's leave those aside. This guy's a socialist. He doesn't believe in billionaires. A lot of the people in the industry, this is as scary as it can get. I knew that was going to come. That was not a surprise. What was a surprise, though, is we're actually seeing business being impacted. So Benefit Street's Mike Comparato, who we've had on this podcast.
Hey, Mike.
He pulled out of a deal, a $300 million deal for a really interesting hotel transaction. They were partnering with a company called Waramaug, and they were going to buy this 7 hotel portfolio that Big Dick Mac's REIT controlled, had taken back from Sindat. It's a whole thing. And they pulled out, and it's just crazy.
I sort of get it, because uncertainty is always the thing you want to fight against as an investor. But the problem is uncertainty is also what creates the most opportunities. The fact that, these were non-union hotels, I believe, and so there wasn't really anything that the mayor can do.
That is correct. But I think what happened here is they're saying that if you have a self-styled socialist in charge and power in New York City, the temple of capitalism, and they bring up words like this, all bets are off. Like, what if there's some kind of mandatory unionization, or if there's a new tax? They just don't know enough. There's too many unknown unknowns, as Rumsfeld would say.
I just think it's crazy, though, because on the other side, like, what happens if every house cleaner and hotel cleaner in New York gets rounded up by ICE? That really hurts you too. So investing is really hard. There's risks everywhere. If anyone drops a deal, like in this environment especially, like, you should not be shamed. Like, no one should be like, what are you doing? He's a steward of capital. If he doesn't think it's the right thing to do, like, it's incredibly valid. That's literally his job, is to make those decisions. But I do think that there's been overreacting, and these things swing back and forth, back and forth, back and forth. And one of the things about New York, at least that I sort of feel like, is the vibe of New York is really what matters. It's the same in San Francisco, as we've talked about with Mayor Lurie sort of bringing that back from that perspective.
And the slim and trim Greg Flynn coming in there and buying some stuff.
Absolutely. Did we not call him slim and trim Greg Flynn?
No, I just came up with it.
That's really good. That's why they pay you the big bucks.
Thank you.
But yeah, a rent freeze is terrible policy. Like, no one, even if you ask Mamdani, he knows it's terrible policy. But you know what the whole goal of this thing is? To get elected so that you can effectuate change. And he has an agenda. He doesn't seem wedded to process. He seems really driven by outcomes.
He is a politician in all senses of that word, right? Like, he wants to win. He knows how to rally a movement. He knows how to create a lot of excitement and momentum around his campaign. And so, I mean, it's the populist thing to say, right? Free buses.
Kind of reminds me of another guy from Queens.
Another guy who's doing pretty well.
Yeah. And look, like, you can see what happened in San Francisco when like Chesa Boudin got elected.
Yeah.
And he was like, I'm going to do these things, and I kind of don't really care what the outcomes are because that's my whole shtick. I guarantee you, if the rent freeze causes deleterious outcomes, he's probably going to back it off, because
Will just wanted you to know that he did well in the SAT because he drops this deleterious element.
I did extremely well. I got a 1580.
Spoiler alert.
You mean nerd alert?
Alert nerd.
And again, I've never met him. I've never talked to him, but just he's the standard bearer for his entire wing of the party. And the stuff that is going to end the momentum that he's got right now is if crime goes crazy and the city gets dirty.
I think if he realizes that if he keeps the streets safe and clean, he can do a lot of what he actually wants to accomplish, and he can keep these real estate forces at bay and keep business interests somewhat happy. I mean, I think that the standard in New York City for so long has been Mayor Bloomberg, and we ain't getting a Mayor Bloomberg again. Like, we're not for a long time.
No.
So they need someone new. Eric Adams, I mean, he was malleable, I think, is the most charitable way you can talk about Eric Adams. Right?
I mean, and for sale is, the least charitable way you can talk about him. But what I just also want to like hit on is that there's more than just one thing that impacts real estate pricing. And if he makes the city cool again, if it remains safe and it stays clean, like, to your point, people can get along with a lot as long as you do that right. And like, one of the things that always happens is, certain super leftist members of the House, you're like, how do those people not get primaried, even in super safe districts? The reason is because they have legendarily good constituent services. And if you fix potholes, if you get trash picked up, people day to day, like, they don't really care.
Yeah.
They care about what they can see with their eyes for the most part.
Yeah, what they can see on the street, what impacts their block, their corner.
Yeah, if the halal truck goes back to $8, then okay.
He did the halal viral video as well. He's just done a very good job kind of energizing people. But at some point, I think between now and let's say November, I think that my prediction is that he will make some sort of common sense outreach to the business community, which includes real estate titans.
100%. And frankly, I think it is an enormous opportunity. If you are a New York real estate guy of certain stature, like, I don't know how you're not trying to get in front of him in a dinner or something.
I've heard of some kind of dinners trying to be organized with him.
Yeah, he's very likely to win. So what good does it do to fight it? Like, figure out how to work with him.
What's interesting, Mayor de Blasio had shut out the real estate industry in his campaign. And he was one of the mayors where I feel like real estate titans didn't mind taking shots at him in the press. However, net, he was fairly good for real estate. Like, I think he was considered a very pro-development mayor, pro-real estate in many ways. So I don't know. In general, real estate people have the ability to separate rhetoric from action. But in this case, at least in this past week, you don't see any of that.
I know. And it's crazy, too, because the guy he ran against and defeated signed the rent law.
Yeah, he did. We talked about this a couple weeks ago. I mean, the 2019 rent laws went to frickin' Governor Cuomo's desk, and he signed them. And that's part of the reason people are talking about the meltdown in the rent stabilized asset class is because of Handy Andy.
He's not a pervert. He's just Italian.
He's just Italian. But should we talk for a second about the deal that went? I think is such an interesting deal, the one that did not happen, the Benefit Street deal.
I mean, to paraphrase Ryan Russillo, I'm more interested in the deals that didn't happen.
So this one, 7 hotels, 1,100 keys in total. Benefit was going to be the equity partner for a company called Waramaug. What is Waramaug? Anyway, they were going to get 1,100 keys, prime Manhattan, Chelsea, FiDi, Herald Square, etc. And I think it was penciling out to about $275 a key.
What was the old recap basis for Sindat there?
It was more like $525 a key is what Sindat paid in 2018. Hersha, which is now KSL, Hersha had bought it and then brought Sindat in at that steep valuation. I think Sindat paid $570 million. They bought in at $570 million.
Ooh.
When do the Chinese not hold a bag is the question.
It's remarkable because there's a lot of hotels that they have held the bag on.
Waldorf Astoria.
The Baccarat?
The Baccarat, $1 million a key. It was a $2 million. I think it was $2 million a key.
Actually, I think the hotel's name is actually sold for a North American record price per key, $2 million. The Baccarat.
I guess it's like Mac Real Estate Strategies, the credit strategies. They made an $85 million mezz loan to Sindat and Hersha. And then they took over the property via UCC foreclosure right at the beginning of COVID.
Yeah, and it's not the world of Astoria. It's like the Candlewood Suites, mixture of other sort of mid-market hotels. But
like prime areas, great areas.
Yeah, no, great areas. I think Sam Chang may have built one or two.
Sounds like a McSam kind of deal, yeah.
Yeah, probably.
And don't you think these are the kind of hotels that would benefit from the Airbnb crackdown quite a bit?
Yeah, no, I definitely think they would. And I mean, I just stayed in one of them in New York the other week. It was full. Free breakfast before 9 was packed.
So there's a lot of fear and a lot of loathing from the primary. People are talking about just pausing and waiting to see what happens, right? Across the board, lenders, investors, etc. But someone has the opportunity to step in now and take advantage of that and get some good prices for these things. Because things have to trade.
Things have to trade. And look, New York's New York. New York has tried to destroy itself for over and over again. And it always comes back. If young people want to be there, that drives everything else.
Yeah. We're certainly not Mamdani stands here. Neither of us is a socialist. But I think this is the reality. This is what's happening in the city right now. And real estate investors have to figure out how to play ball with him. I mean, there's going to be workarounds. They're going to go to the state level where they've always had a lot of juice. And they're going to try to make sure that their juice is intact there. Because as you know, Will, the state has a pretty big influence on how rent laws are set in New York City.
Well, yeah, because again, the guy that he just beat signed the rent law that everyone hates.
Right.
So there's two things that I sort of want to like button up here. The first is that everyone who says, I'm only investing in, not investing in New York or California, like I'm only investing in red states.
John Katzmatidis running to South Florida, right, with his chicken.
Right, because no one has ever made money investing in real estate in New York or California, and no state has ever had any challenges. It's crazy. Like the whole point of regulation is that it makes it really hard to do. And so if you can do it, you can make a lot of money because by definition, there's not a lot of competition. There's a reason why, Two Trees is able to build in Williamsburg when like someone who has 25 IRR money can't.
Yeah.
That's the whole thing. Like the fact that a Brodsky is probably making as much in rent as it costs to build one of their Columbus Circle buildings 35 years ago. That's the whole thing. All of this is risk. All of it is pricing the risk. There's a price you would pay for everything. And to me, I think the risk has been overblown. And then the second thing I want to say is to make it in real estate, you have to be a deluded optimist because all this stuff is so crazy. It's the worst business.
I think Henry Elganian of Rockrose called it a sickness. He's like, you need to have not just an optimism, but it's like almost a sick level of optimism to make sure it works.
Totally. So what does it do to say, woe is you? If you're a New York developer, what are you going to do? You going to go move somewhere else? Why not be optimistic? Because there are things to be optimistic about.
Did you catch the exchange that Peter Hungerford, our guy who's been buying up all the rent stabilized units? He had a little spicy quote. I think it was in Bloomberg. He said the following: I think this will accelerate the pace at which a lot of landlords give up, i.e.,
sell to me.
This is going to make my pipeline look pretty good. Real estate investment is essentially a battle of narratives, right? Which narrative, which story do you believe in? And I think the Mamdani story, for a lot of real estate people, is a scary story. If you're interested in getting in front of our audience, hit us up at partnerships@thepromote.com. That's partnerships@thepromote.com. So, Will, a couple weeks ago, we talked with our boy Mark Ganzi about his asset-light approach to data center investing. And now we've got another example from the hotel world, which is your old world, and you wanted to talk about it. So, Hyatt and Tortuga. Tortuga?
The mystical isle. Let me just say, I miss hotels so much every day.
You really do. There's a wistfulness when you talk about hotels.
One day, I hope to, be wealthy enough to go back to investing in hotels.
You know what I hear about investing in hotels?
What's that?
It's hard.
It's so hard. It's so hard.
Did you see Goldman just pulled out of a deal to develop something?
I did in Greece.
Yeah. Anyway, go on.
Okay. So Hyatt Hotels bought Playa Properties, and Hyatt has been indexing towards all-inclusive Mark Hoplamazian. think I said that right.
Wow, you nailed it. Poof.
Yeah.
You should move to LA.
So they've been over-indexing towards all-inclusive resorts. Now, for those, the hotels aren't necessarily owned by the hotel companies. So you have the C Corps and the REITs, right? And so the REITs are the ones like Host, which actually own the hotels.
Yeah.
The C Corps are the brands. And so they own the IP.
Your Hyatts, your Marriotts, your
Hilton,
etc.
Yeah. And they own the IP. They own all the brands. So you pay a fee to use the brand, use a fee for advertising.
And also importantly, I should say they own the consumer mindshare, right? Like no one thinks of the owner. That you just think of a Hyatt
Exactly.
or a Hilton.
Exactly. And so it's one of the things that always like got my goat on Twitter is when people would, do that tweet where it's like, Uber owns no taxis and like Airbnb owns no hotels. It's like, who else doesn't own any hotels? Fucking Hyatt. Because owning hotels is a very hard business. And so they have gotten out of that. So they bought Playa, which is great because they're like, okay, we have all these very high dollar, all inclusive hotels and resorts.
When they bought them, they bought the brick too, or what?
Yeah, they bought the entire public company. So Playa was a public company.
Okay. So we knew when they did that's not going to be the long-term plan, or?
Well, generally they want to get away from owning the assets. So it's not a surprise that they sold them. It's a surprise that they sold them this quickly.
The press release about the closing of the Playa deal that they did just came out like a couple of weeks ago.
Yeah.
So this is a John Gray style where you're, buying EOP and then slicing it up as quickly as possible.
Exactly. And so they are selling it. They're selling the assets themselves. I think 15 of them to a joint venture between KSL, who are just about as good hotel guys as there are around. They own Altera Ski Company.
And we just talked about them because the transaction that Benefit Street pulled out of was a Hersha deal, which is now owned by KSL. Just a little extra context.
Exactly. And then a Mexican family office.
Tortuga. Well, Tortuga is a JV between KSL and I guess it's the family office for the Chico family, which is a very big family, very prominent family in Mexico.
Right. So a couple things that are really interesting about this transaction, other than just the speed with which it happened. So one of the big things that the Hotel C Corps try to get is management of the hotels.
Yes.
So in addition to paying 5% franchise fee, 1% marketing fee, they will manage the hotels. So like when you walk into the Secrets, Las Romanas, the front desk employee like works for Hyatt.
Yeah.
And those management contracts can be incredibly lucrative because the payroll gets paid for by the hotel. So the management fees are really asset light and very good business, particularly on these high dollar hotels because they generate so much revenue.
And this is just zooming out for a second. This is the kind of revenue that everyone is chasing, right? This kind of scalable asset light fee stream. I think Comparado talked about it with the mortgage servicing rights as well, right? Like
if you're a public company, what a public company shareholder wants is like predictable earnings, and they don't get much more predictable than a 50-year management contract.
It's incredible. So what's the normal comp is what, 20, 30?
20 or so, depends on the type of hotel. So there's definitely some shenanigans in this cap stack because, Hyatt has a $200 million pref piece that they're holding on to.
I take it from the way you're talking about it, it's not easy to get to a 50-year contract, right? Like that's not a normal thing. Like Barry Sternlicht would look at this and say, well played.
I mean, well, Hyatt definitely had to give something to get the 50-year term. Mm-hmm. And brand management is generally not considered the best. You generally want to bring in your own management, especially for full service assets like this, or like these are. They're very intensive. You need people who like just do this because Hyatt does a lot of things. You want someone who just does this. Mm-hmm. So generally speaking, if you're looking at a hotel, like the first question that you would ask is like, is it encumbered by brand and is it encumbered by management? And the management encumbrance here is 50 years. So it is encumbered to kingdom come. And you're stuck with the management.
Wait, let's break that down for our audience. So if you want to get out of the management contract, you basically have to pay up to get out of it.
You got to pay liquidated damages for 50 years.
Basically like when in soccer, when you fire your football manager, when you fire the gaffer, you have to pay them out.
Yeah, but if their wages were like equivalent to like 4 years of revenue for the club. Think about it this way. If you bought something, the best way to fix it is to bring in new management. And basically you can't. So KSL, obviously very smart, sharp, savvy guys in the hotel space. these are international, which makes it maybe like a little bit easier to get around the management encumbrance, like to come to grips with it if you're the next buyer, because you can basically say like, okay, this is a full service hotel in Florida. So having the Hyatt management isn't necessarily as much of a negative, but it's definitely something to keep an eye on. And that's why it sort of was interesting to me, is that they're basically paying whatever EBITDA multiple on this fee stream, and KSL is getting these assets.
Yeah, well, just let's put some numbers to this. So they say in the release that Hyatt's net purchase price for this business is essentially $555 million.
Yeah, and I think they said they were going to make something between 55 and 60 million of EBITDA.
When a family office comes in, so you said they're doing this like in an interesting sidecar deal. Let's talk a little bit about that. Like, what's the juice here for Rodina?
You have a best-in-class operating partner who has tons of access to capital. Like they could have raised this. They could have done it out of one of their funds. Like it would have been big for them, but like they could have done it. Like Altera is bigger than this. Yeah. But you have a very large family office that frankly I had never heard of. And they're buying very trophy assets with a very trophy operator from a very trophy seller. And it's obviously a bet on global travel, because these are very expensive resorts to go to, and they're very reliant on the global consumer feeling affluent and not being in a recession.
Anything that's changed more broadly and kind of in the macro environment to get us to this kind of transaction? Or are we seeing more deals structured this way where you're buying it and then quickly getting out of it?
I think that everybody kind of wins here, where Hyatt gets these management contracts. They get to, index more into all-inclusive, which they'd been looking to do. And then KSL gets these at maybe not necessarily like optically a discount, but with some capital stack shenanigans, they get in at a basis they feel really good about. And they've got a long-term capital partner behind them.
You keep talking about capital stack shenanigans. What part of this contract would you most, if you had one page to look at?
I would definitely want to understand the earnout.
The town will never be the same.
After the Tangiers, the big corporations took it all over. Today it looks like Disneyland.
So why are we talking casinos? They're trying to build a casino in New York City, which hasn't happened for a long time. And all the developers you can think of are falling over this opportunity. Well, a couple of people bounced. Related was trying to do something in Hudson Yards. They're out. Saks was trying to do something for a minute right above their store on Fifth Avenue.
Oh, yeah, but they got bigger fish to fry right now.
Yeah, that's $600 million. It's like a very strange rescue capital deal that's going on with them.
It's the most convoluted, bankrupt covered land deal that's ever been done. Though I will say, like a $100,000 a hand, poker room at the top of Saks would have been kind of cool.
I think so too. I think it's a nice location, but we have a few players left in the race that I want to get into, and each of them is offering their own kind of sweetener. So instead of getting into the broader vision of all these casinos, because you can go read about them anywhere else, I thought it'd be fun to just get into the particular sweeteners that each of these development groups is offering.
And there's been some news on the first one I'm really excited to get into.
100%. So let's start there. Let's start at 1515 Broadway, which is the JV between the mighty REIT SL Green and Caesars, right? 1515 Broadway. What have they got?
They have the hardest working man in America. Like he'll do anything to make it happen.
So it's 150 push-ups, 150 sit-ups, a 5-mile run, and then he's going to sell you a piece of this casino for $500.
I can't even see what straight face. For those of you who don't know why we're laughing like idiots,
we sound like maniacs, but he's going to fill you in.
You have to go read the close
as the day in the life with Ryan Williams.
Yeah, the day in the life of Ryan Williams from Cadre.
I'll put it in the show notes.
It's from the peak of his cadreness.
Will, when you go to sleep, you might think about building a good life for your son and your family and maybe a good business. When I go to sleep, I think, how can I ensure we build the world's most impactful marketplace for alternative assets? There has never been a man who's taken himself more seriously. Ryan Williams is now running the crowdfunding portion of this sweetener, which is part of what SL Green and Caesars are touting. And then the Reverend Al Sharpton is involved too. He's giving his endorsement. I don't know what's going on. I think 1515 Broadway, I think this is going to win. First of all, a casino in Times Square is probably, to me, the logical place to put it. But
yeah, Times Square makes the most sense. Absolutely.
Who else is going in? So Silverstein and two gaming companies, I forget their names, they want to put this on the far west side. And they've got a Hyatt hotel component to it. And their sweetener is really interesting because they're bringing in the other part of their business. They're talking about funding 2,000 office to resi conversions as part of this plan.
I mean, worked in Vegas.
You know who their partner is on that? You want to take a guess?
Ooh.
On the conversion part.
Oh, of course. Our good friend Nathan Berman.
The Alchemist. Yeah, absolutely. And then we've got Joe Sitt. That name hasn't come up in a long time. Joe Sitt's partnering with the Chickasaw Nation for his Coney Island mega project.
I kind of think Coney Island would also be a good place for it.
It's just a little too far to get to. But I mean, I think from a quality of life perspective for New York, it's the right move.
So the real question is if this casino goes to Coney Island, does John Katsimatidis come back because he has those 2 towers on Coney Island?
It does. And Ruby Sharon's got a big project there as well. So the way that these guys are incentivizing, or the sweetener that Sitt and his partners are offering, is a $200 million community trust fund, which I would imagine is kind of like what the big developers do with community improvements around their, transit improvements and such. And then finally, we've got part-time farmer, full-time mogul Stefan Soloviev. He wants to put this on the East River.
So this was actually the site of New York City's Olympic bid in billions?
Yes, that is right.
So I actually also think this is not a bad place for it because it's been fallow for so long. And it's you drive by it and it's just like a missing hole.
I think Soloviev would appreciate your agricultural pun there, by the way.
Thank you. I do my best.
And so similar to what Sitt's offering, they've got a community reinvestment fund, but it's not a set dollar amount. They're saying that it would get 2% of the annual gaming profits.
The casino basically is licensed to print money, but that license is really expensive and you got to figure out how to pay for it.
Why is this happening now? I think this is post-COVID. I think these developers saw an opening.
The state decided they were finally going to do it.
But was the catalyst or the impetus for this what to do with all the stock after COVID?
Honestly, it was probably like DraftKings and online gaming and seeing like Jersey and all these other states get the revenue.
Yeah, I guess that's true. I mean, it's tough though. I don't know. Principally, I'm a little bit opposed to it. Not a big fan.
I'm horrifically opposed to online gambling. I am very pro in-person gambling.
Let's play some fucking cards.
That's it for the Promote podcast this week. After busting on Cuomo, the real estate industry is hoping to shoot the moon with atoms. Hyatt wants in on the action, but doesn't want to furnish the spot. And New York's developers are offering political high rollers the whole knish. Okay, we gotta stop because I'm out of gambling puns.
Yeah. Please like, share, subscribe, postcards, emails, Reddit.
Well, that was a blast. Thank you.
Thank you.
We'll see you guys next week. Ciao.